In this video, we will show you the Wealth Chaperone methodology. Specifically, we will show you how our proprietary indicators help us determine when to buy and when to sell. We have over 20 years of experience in the financial markets, and during this time, we created a mathematical formula that helps us to determine extreme prices. Stocks move up or down because of three basic criteria: volume, buying pressure, and selling pressure. Let's begin with volume. Volume is really momentum. It is the gas that runs the car. The more gas you have, the further the distance you can travel. The less gas you have, the shorter the distance you will travel. But the further you drive, the less gas you have. Imagine if you had an ice cream store. What would the store look like if you have 5 people that walked in at the same time and wanted to buy an ice cream cone? What if 50 people walked in at the same time and wanted to buy an ice cream cone? What if 500 people all walked in at the same time and wanted to buy an ice cream cone? You would be the busiest when you are serving customer number 1 because you have 499 more to go. You would probably work crazy to serve all your customers, and eventually you would realize that your job is a little easier because you were halfway. Only 250 people to go. You would continue to work and probably start to feel better when there are only 10 customers left. Your work is almost done. When the last customer is served, you can finally take a rest since there are no more buyers in the store. This is exactly what happens in the financial markets, but instead of buying ice cream, people buy stocks. That is what our volume indicator measures. Think of it this way. We have created a formula that counts the number of customers that are buying ice cream. Once we get to only a few left, there will be no one left to buy. Once this extreme is reached, the stock will likely fall. The opposite is also true. If 500 people come into the store and we haven't served any of them yet, then there are many people waiting to buy. The stock will likely go up. Here is a chart of a stock with our volume indicator in blue. Each time the indicator crosses the bottom line, like in this case, the buyers are about to start buying. Each time the indicator crosses the top line, like here, the buyers are leaving. You can see what happened to the stock in each case. Here are 4 more signals that worked very well. Here are 3 instances where the signals were false. We wanted to show you real-life examples of how to use this indicator. More about that later in this video. Now, let's discuss buying pressure. Imagine you are at an auction, and you have a chance to bid on an all-expenses-paid trip for you and 20 friends on this beautiful yacht. The room is filled with 1,000 people that are considering a bid. The auction begins, and the price starts at $100. Imagine how many buyers gladly pay $100. That is what we mean by buying pressure. Now, imagine the auction continues and the price goes to $1,000. Many people are still willing to pay, but slightly less pressure than what we saw at $100. Imagine what would happen to the buying pressure if the price reached $10,000. And what would happen to buying pressure if the price reached $100,000? At $100,000, we would say that the pressure has reached the top. It's over. This buying pressure is what our second indicator measures. It keeps counting the pressure until it reaches the top, like here, or an extreme low, like here. Here is a chart of the same stock, and this time we added our buying pressure indicator in green. You'll notice here that the buying pressure reached a top, and the stock dropped. Here are a few more that worked relatively well. Here are a few that gave us false signals. Don't worry about these for now. Our last indicator measures selling pressure. It works exactly the same as buying pressure, except in this case we count the selling, not the buying, until the selling pressure reaches an extreme top like in this example, or when the selling pressure reaches an extreme low. Here is the same chart, and now we have added the selling pressure indicator in red. Remember, if the selling pressure is at a bottom, like here, it means it is too low and the sellers will start selling again. As they did, the stock dropped. When the selling pressure is at a top, like here, there are very few sellers, so the stock will likely move up. And here are a few more signals that worked well. And, as always, here are 3 signals that didn't work well at all. We can't eliminate all the false signals. However, we can remove many of them by waiting for all three indicators to give us a signal, either buy or sell. Let's start here. The volume indicator, in blue, tells us that the volume has reached an extreme. We know this because it has crossed the top line. We follow that point down and see that the buying pressure, in green, is also very high, and buyers are likely to stop buying. Not quite an extreme, but very close. At the same time, the selling pressure indicator in red is very low, telling us selling is about to begin. Within a day, the stock fell for an entire month. The next signal came 5 days early, but then gave another buy signal in quick succession. The stock went up for 5 months. Here is another powerful sell signal. Finally, because we want to show you a real example, here is a signal that, although it worked for 3 days, it was not ideal. Overall, several fantastic trades on this stock, which, by the way, was a chart of General Electric. Remember, our proprietary indicators show extreme values in volume and buying and selling pressure. Extremes are not exact when it comes to timing, and they can be anywhere from 1 to 2 days away from the move to 5 to 10 days in extreme cases. The indicators do not have a 100% success rate, so we must adhere to risk management strategies as well. And of course, you can combine these indicator readings with your analysis.